taking a look at Bitcoin going up again this morning. It's just under 35,000 at this point. And I want to welcome back to the show Mike Novogratz. He's founder and CEO of Galaxy Digital, which has made a big bet on Bitcoin. So, Mike, I guess you're sitting pretty this morning, as you have been. As we look at what's happened with Bitcoin, and there's always cautions, right, when you invest in Bitcoin about volatility, about potential pullbacks, about potential corrections. It hasn't happened this time. And since Bitcoin has sort of a lack of correlation with most other assets, how do you figure out what might trigger that sort of correction? How do you prepare for it and defend against it?
Yeah, like that's a $64,000 question. I got a couple calls when it was at 41,000 from guys I invested with literally 6-7 years ago. And they're like, I've been really good at buying it, but I haven't been good at selling it. Is it time to sell? It's interesting. We certainly went parabolic. We had all the markings of a speculative frenzy, right? Volatility spiked to 130, 140%. We had lots of call buying, retail leverage way up, hard to get cash in the system. And so that usually is the mark of a correction. We had a pretty big correction, right, from 41 to 30. What's been interesting is there was a wall of money down buying it at 31. And what I would tell you is the institutions who are coming into this space now, that weren't in the space 6 months ago, that weren't in the space a year ago, don't have their fill yet, not even close. We're in the first inning of a 9-inning game with insurance companies, with asset managers, with the wealth channel. And so I think dips will be bought. It doesn't mean it's going to explode right to 50,000 right away, right? There's still a lot of, price to churn, right? If you bought it at 15,000, you made a whole lot of money. You might want to sell it and buy a car. You might want to sell it and buy a house, depending on how much you bought. And so there always are sellers in markets. But what we're seeing is a transition from retail leverage players into much deeper pockets, much longer holding hands institutions. If you're an insurance company and you buy Bitcoin, you're not buying it for 2 months. You're buying it as a long duration asset with a 4 or 5 year horizon. And so I think we're going to continue to see volatility. I think you're going to continue to see dip spot.
Mike, I'm guessing you saw that story in the Times yesterday about some people who lost track of their Bitcoin. And there was a stat in there from a Bitcoin tracking firm that said they suspect 20% of all coins have been lost. No one either, they don't know how someone has a right to them, but they lost the passkey, whatever it is. I'm curious just in your view, what that role, if any, that plays in liquidity, if that matters to you at all, sort of the ability.
There were only 21 million Bitcoin that will ever exist. And, our estimate is 3 million were lost. And how did they get lost? Well, when Bitcoin was 1 cent or 4 cents or 20 cents, people didn't really take it that seriously. And so most of the lost Bitcoins aren't happening today. They happened right at the early onset of this thing. People got excited about it and then forgot about it because it wasn't, it took a while for the ecosystem to be birthed. And, they were on computer drives, got thrown in the trash, people lost their keys. And so no one's losing Bitcoin anymore, right? Just like no one's losing an ounce of gold or an ounce of silver. Bitcoin are precious at $36,000 each. And so they're well protected for most people. But most of that stuff got lost. So it's just less supply. So when we say there are 21 million Bitcoin that'll ever be mined, it's really probably closer to 18 million.
So, Mike, I have a supply follow-up question for you then. As you mentioned, 21 million is what all the Bitcoin that are out there. There are already financially settled Bitcoin futures. And when you think about gold, there's more paper gold than physical gold. So there are some concerns over the Bitcoin scarcity, right? And what that does to trading in Bitcoin. Are those concerns warranted? How do you think about that?
Yeah, listen, so like the Grayscale Trust, for instance, right? Barry Silbert's business, it buys Bitcoin and it literally puts them in a vault. Figuratively and literally, and they're gone for good. And so they're kind of taken out of supply. Now they're shares in a trust that trade. Right now it trades at a premium. It could easily trade at a discount if there was an ETF. And so some ways it makes the supply of Bitcoin even more precious, which is driving price. One reason why I never thought Bitcoin would be a currency, right? Fixed supply currencies don't tend to work. They're too easily squeezed. They go up in price by definition. as more and more people enter the ecosystem. We don't want to buy shoes one day with something that's $1 and it's worth $2 the next day. And so I've always thought Bitcoin would be a digital store of value, something like gold that people would buy and hold as opposed to transact with, right? There's going to be a lot of different payment coins from, Facebook's new Diem coin, used to be called Libra, to stable coins, lots of people working in that space. I think that will be the transactional currency of the blockchain. And I think Bitcoin will be gold and will just be held, and partly because it's got that limited supply.
Mike, really, we were talking about the rise in Bitcoin in the last block, but today we came into the session seeing reports that Gary Gensler may be nominated to lead the SEC by President-elect Joe Biden. Is Gensler, does he make your job harder, and would he serve as a wet rag to the crypto industry?
No, not at all. Listen, I think Gary Gensler, first of all, I worked with Gary at Goldman Sachs in Hong Kong way back in the 90s. He is wildly smart. He's taught a class at MIT on blockchain and Bitcoin. And so he understands the space. He likes the space. He understands the nuance around the space. Listen, Gary he was a tough commissioner at the CFTC. He is really bright. And so there's no pulling the wool over his eyes. I think he's already commented that both Bitcoin and Ethereum are not securities, which is, already law at the SEC. I think if you're Ripple XRP, it's not great news because he's commented he thought they were issued like securities. And so, there'll be some nuance around the different coins, but I think he will be pro-crypto. The last Jay Clayton didn't want to make crypto his issue. And so kind of punted on all the issues for the most part. And I think Gary will address, and the more clarity we get from the regulators, in a lot of ways, the better it is for the whole system. Right? People look for clarity. And so I'm hoping Gary gets appointed. I'm hoping he gets approved. And I think it'll be great for the system.
Mike, do you think Gensler would be supportive of a Bitcoin ETF?
Yeah, I think whoever gets that space is going to be supportive of a Bitcoin ETF. Listen, we have a de facto ETF in the Grayscale Trust. And if you think about what the SEC is supposed to do to protect the little guy, they've now allowed a $20 billion kind of fake ETF, right? It's a closed-end fund, a trust, to be retail's outlet, where retail is buying Bitcoin anywhere from a 15 to 30% premium and paying high fees. And so it's kind of crazy that the SEC thought they did their job stopping an ETF when they actually allowed Barry's business to get started, right? This Grayscale Trust. It should have been the exact opposite. And so I think you will see an ETF come soon. Again, what is soon? It's probably within the year because it takes a while when you get to a new job and process this whole thing. A lot of the ETF discussion was around good pricing on the index. Right now, the CME future trades with tons of liquidity. You can argue it's great pricing. And so I think we'll see an ETF, like I said, within the year.
Real quick, Mike, this doesn't fall under the SEC's purview. It's under Treasury. But what do you make of that new rule that is going to require more transparency, although the comment period, I guess, is just closed, but more transparency around IDs in digital transactions? Well,
listen, I think, Steve Mnuchin, shockingly, right? He spent his whole life as a real estate, guy. And you would have thought maybe he would go to Fannie and Freddie. Instead, he makes his last stand in crypto with a 15-day comment period instead of the normal 40-day comment period. There were 7,000 comments pushed in. We've got a president that's being impeached. I don't know if this whole rule is even going to go through, or it's just going to die on the vine because there's chaos in DC right now. I think everyone in the crypto community will acknowledge that you need some safeguards around KYC, AML, and understanding where crypto ends up going. There are far, far better ways to approach the issue than the ones that were pushed forward in those rules. And I think that's why you saw 7,500 comments from really thought out comments show up. And so my hope is this thing dies on the vine, and my guess is it does. And if it doesn't, you got a new administration, you'll start, lobbying and trying to make sure the rules make sense. We don't want to kill innovation in this country and push it offshore. There's an arms race in central bank issued digital currencies. China is way out in the lead. And if the United States wants to remain the reserve currency for the world and the premier store of value for the world, it needs to be tech forward. And the Chinese are certainly doing that.
Yep. All right. Always an interesting conversation. Mike Novogratz, founder and CEO at Galaxy Digital. Mike, really appreciate you taking some time to talk with us this morning, and we'll be in touch.
Thanks a lot.